Well, hello again. This is Edge from High Tech Trading Analysis. Tonight I'm going to talk about trade planning. Not so much necessarily in reference to methodology or your total trade plan that you shouldn't have in place, but an indicator that I've developed for NinjaTrader 7 to help you identify your risk reward, total contracts that you possibly could take. Rather than talk generics, let's just take a look. I'll leave these on for a minute. I just did a presentation just a minute ago. I'm going to use the exact same chart on the swings presentation that I just got done doing. Now, let's say I've already added an indicator to my chart, and I'm calling it a trade plan. Now, I'm going to left click on that, and we're going to go short. And let's just say that we're looking at the euro market right now in a 20-minute chart. And let's say that I want to we're making, hypothetically here, we're just going to talk hypothetics. Let's say I'm going to get short right here at the last traded price. And I'm going to put my stop about 5 ticks. You could make it 1, you could make it 2, you could make it whatever you want, above the last swing high. And let's say that I'm going to enter 3 contracts, since this is a futures market here. And I'm going to take my first one off, at that swing, and I'm going to take my second one off down here around this area here. And we're going to try to catch a runner down to about here. So I had a swing here, taking one off here. I just kind of look in here. I'm right above the highs here, right above the highs here, right before the lows. Now, let me get rid of my swing indicator. Let's make this chart a little bigger so that you can see. The indicator is this little icon right here. When I use the pull down, I enable the planning. It puts an entry, a stop, and the way that I currently have it set up to 3 targets. So now, generally, somebody would just say, okay, this is my plan, this is what I'm going to do. Matter of fact, you might not even have your stop up that high. We'll just say we'll have it, yeah, that was probably good. So what this is telling me, the price of my stop and the tick offset from the entry. This is telling me the price of target 1 and the ticks that I'm looking for, the price of target 2 and the ticks that I'm looking for, and the price of target 3 and the ticks that I'm looking for. So how do I know? How can I tell if this is a good trade? What is my risk reward? How many contracts should I be trading with the amount of size that I have, or the amount of account size that I currently have? What if I'm risking 18? What's my overall dollar risk on this trade? What I've done is, in this same indicator, if we use the pull down for it, I have a plan details. Up here at the top, this will highlight what I'm looking at for my plan. Now, I'm not saying that this would be a good trade, this would be a bad trade. We're just hypothetically saying that we're going to take this trade, And you know, you could say we're going to wait for a little pullback to about here, and most people would probably say, well, if we take out that stop, I'm just looking back and saying I really don't want it much above there, which is 67, so I'll put mine at 69. I'm looking at a 16 tick risk. I'm looking at my first target of 20, a second target of 54, and a third target of 97. Now, my first target is a 1.25 to 1 risk reward. That's okay. It's not great. It's better than 1 to 1. I would never suggest anyone trading with less than a 1 to 1. Preferably more on a 2 to 1 type scale, and even better if you can end up with 3 to 1. What I'm seeing here on this particular trade that was laid out is I got a 1.25 to 1 on the first, a little better than 3 to 1 on the second, and about a 6 to 1 on the third, which gives me an overall trade plan of 3.56 to 1. That's not bad. I'm risking a total of 48 ticks, or on this particular instrument, since each tick is $12.50, I'm risking $600 to make $2,137.50. All in all, that's probably not too bad of a trade plan. In my eyes, it would be acceptable if you felt like that was where you wanted to get short, and that was as high as the euro market was going at this point in time. Now, there's a couple things that I've added to this. If we look at the indicator settings on this and we come down and look at our trade plan, we can adjust the color and the style of our entries and our targets. So if you're using a black background, you can make this cyan and this red and these lime, and the same goes for this up here, and that'll look nice and pretty. What I want to show you currently is this field right here, which doesn't have a pull down per se in our little icon right here. And we give you the ability to put an account size there. As default, I've got 20,000 there. Some of you probably aren't working with that. You would need to adjust that to, 10 or hopefully nothing less than that. But some of you are probably trying to take a stab at this with $5,000 or whatever. If you're trading stocks and you're a pattern day trader, your account size would have to be $25,000 or more, because that's just it's the regulations. In any case, for well, I tell you what I'll do. For this conversation, I'm going to say I'm going to look at a $20,000 account size. Now, if we use our pull down on our indicator itself, we can come down and what we did was we enabled planning, which put our lines on our chart. We pulled out our plan. We came down and said show trade plan, which is what brought all of our details up. Now we can even show percentages. What this does is add another line here. And what this is telling me, that is based on the current risk, or the 16 ticks that I have involved in each contract that I'm trading, that for the account size, the $20,000 that I'm looking at, for every one contract, I'm actually risking 1% of my total account size. Now, if we look at our pull down here, we have an account risk. Now, this is also, all of this is adjustable in the indicator panel itself, but I make this nice and neat for you to be able to get to very easily and change on the fly. If, for instance, we want to risk, we're willing to risk 2% of our total account size on any given trade. That's the way this is set up right now. This is telling me that I am allowed to trade 2 contracts. It's telling me for every 1 contract that I'm risking 1% of my total account size based on the risk that I have set in this trade. If I adjust that risk down, you can see that this dynamically changes. Now it's telling me that my risk isn't, now if I just put it a tick above that, this is telling me that every contract is only 0.75% of my total account size. And based on the account risk that I've specified, I could actually trade 3 contracts. Now I'm a little over. I'm actually risking this $450, which is my total risk for this particular trade. By readjusting that, is actually 2.25% of my total account size. So if I were to put this back up here, and now this is telling me I'm risking 3% of my account, and I'm not allowed to, I have discipline enough that I won't allow myself to do that. What we can do is, in our pull down, we have a T1, a target 1, a target 2, and a target 3. Now we can manually adjust the size of those targets from 1 to 5 or from 0 to 5 in the case of T2 and T3. So let's say that this is telling me I can only trade 2. I have the discipline enough to say I'm only going to trade 2. So now I'm going to take target 3 and put it to 0. As you can see, my target 3 line disappears. My target 3 line down here disappears. Now I'm going to readjust and say, now maybe I want to take that as a target 1, and I'll still leave target 2 there, and I'll still leave everything the way it is. So now by readjusting this plan, by only trading 2, by sticking to my 2%, I've modified it just a little bit. But now I'm looking for about 1.5 on my first, a little better than 3 on my second, and now a total risk reward for the plan of 2.4. You can see by having a smaller, if we adjust that to here, even if we adjust that to there, even though our second target is still better than 3 to 1, by having such a small first target, we adjust our total trade plan risk reward considerably. A better, and again, we're just talking hypothetical, a better situation here would be to pull that down to, let's say, here, and pull this down to right above this area here. I'm just hypothetically doing this now. But now I'm looking at 1.6, and I'm looking at 3.8. Now I'm approaching my 3.3 to 1, which is where I would like to be. Can't always get there, but as long as you're better than 2 to 1, you're usually in pretty good shape. I am now willing to risk $400 on this particular trade, but if my trade plays out, I'm going to make 11. So 2.75 to 1. I'm risking 2% of my total account size. But if this trade plays out, I'm going to gain 5.5% of my total account size. Now, let's just say that I am not willing to get back in until here, and I am willing, and we're hypothetically here, and that's going to be the high, and that is going to be my risk for the trade. Now this is telling me that based on my 2%, I could trade 4 contracts. Actually, I think 2% is kind of high. So if we took it down to 1%, this is still telling me that I can trade 2 contracts. This also is telling me that I've got a risk reward now of over 3 to 1 and 7 to 1, and I've got a trade plan of 5 to 1. I'm going to risk a little over $200 for over $1,000. I can be wrong 5 times, and I can be right once, and I can still be in the green and make money. Now, I'm not really here to discuss what you should or you shouldn't do or what recommended practices. What I'm here to show you is that by using this indicator on any given trade and planning your trade up front, you can actually see now what you're doing. You can see what your risk is. You can see what your reward is. If you're looking at that and you're looking at scalping, which a lot of people are doing, they're looking at, oh, I'll get in here, I'll put my stop here, and I'll take my target off here. Well, that's a 1-to-1. If you're, you have to be right over 50% of the time. You have to be right once out of every 2 times, for sure. If you ever have a 4 or a 5 trade losing streak, you've really got to dig yourself out of a hole. I don't think enough people are planning out what they're looking at. I feel and I see that so many traders are looking at this and they're just getting short here. And they're saying, okay, I'll put my stop here. And now they have no plan on where it is they're going to exit or where it is they're going to let price come down to. They have no initial plan. I'm not saying that we can't deviate from this if price is dictating that. If price comes down here and holds and comes back up and comes and holds and starts going back up and you feel like we're going to go up and make new highs and come back up to this area, well, sure, close your position out and wait for the next trade. But what I'm trying to say is don't arbitrarily enter a trade and not know where you're getting out, first of all. Before I'm ever entering a trade, I know where the exit door is. You have to have some kind of idea of where it is that you're planning to take profits. And you have to know what kind of risk reward is involved in the trade that you're going to place. Now, for those of you that want to trade multiple contracts, we could, let's just say we had a $50,000 account, or we had something arbitrarily. We're not worried about the percentages here. We'll take T1 back up to 1, and we're going to trade 4 contracts, and we're going to take T2 to 2. Okay, and this is still our trade plan here. So we're going to risk $450 for the possibility of making $25.50. We still have a 2-to-1. Even if you come up and set that, let's say, there, your first target is still better than 1.5, well better than 1-to-1. And your second and third targets are really going to make you some money if they can play out. Now, maybe you don't spread your contracts out like that. Maybe you want to take T3 to 0, and maybe you want to take T1, T2 to 0, and maybe you just want to trade one contract. And you want to trade one contract kind of like this. You're willing to risk 9 ticks for 28 for a 3-to-1, and you're an all-in, all-out player. Again, we can adjust those contracts. If you wanted to trade 4 contracts, we still have the same risk. And we have a little less reward because we're not looking to catch that runner, but we still have an overall trade plan of greater than 3-to-1. Now, I normally am coming in, and I am definitely a type of trader that likes to scale. I like to scale out on the way down. What I like to do is limit my risk. We never know what the market's going to do. The market might go straight up. The market might come down to here and come out. The market might just come to, here. I want to limit my risk. I want to limit my risk there. I'm looking at the highs here. That looks good for a second one. And, now that I've got my first target of 19 and my second target of 58, I've definitely covered all of the 27. I've got green in my pocket. Even if that would happen to come down, I'd still be okay. And now I want to play my second one for a pretty big runner to come down here, and let's just say that we're going to come down and test those lows. And I want to look for a 10-to-1, or I want to look for 100 ticks on that second one. I can do that. Now, let's go back to another scenario. Let's just hypothetically say that we're coming in and we're doing all of this on T1. We'll just trade 3 contracts. And we are looking for a big move like this. And we'll put our stop there. We're willing to enter here. We're going to wait for all of our contracts to come off down here. So now we're risking a total of 39 ticks to make 180 at a little better than 4.5 to 1, 4.62 to 1 to be exact. Now, let's say that price is coming down and 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 price gets down to here and starts to stall. Well, at this point, if we came back up and test that close and never make it above this little low sticking out here, maybe I want to adjust my stop. And I come down, and now I have hardly any risk in the trade at all. Price hasn't got to my target yet. Let's say price is coming down and I'm all the way down to here, and I'm only 10 or 20 ticks away, but yet I'm risking 40 for 10. As we pull our stop down and we trail our stop, we can see that no matter, even if our trade doesn't play out, if it comes back and stop, let's just say that we put it here because we don't want price to come back here. And as price goes down, we trail it above the last highs. And then we trail it above the last highs. And now price is down here, and we go ahead and say, okay, we're going to get greedy, and we're just going to keep playing our stop down. Greed kills. But we can see what we have locked into the trade. Now, I'll be up front here. This is based on my whole quantity that I have in here. If I were to have this on 1 and this on 1, and this on 1, and we're trailing our stop down to here. Once our target is hit and we're continuing to trail the stop, the dollar figure in the tick value is based off your total trades. It does not know if your target got hit or if your target did not get hit. I will probably look at maybe in the future adding that. Putting an alert, these should actually be probably reversed. Putting an alert on T1 so that if T1 gets hit, maybe T1 disappears. Underneath, we'll add a little column saying we've got this much in the bank, what we're risking on T2 and T3. I don't know. There's quite a bit of work in that, and at the moment I'm quite busy on other things. But I see the value in that, and it will probably be something that I work on towards the future. Please do not buy this indicator based on what might possibly come in the future. There is no guarantees I will add that, but that is definitely on my list of things to do, along with several other things for several other indicators too. So it's all a matter of time. Now, a couple other things I would like to show you. If we want to reset this plan, we can either left click our plan to go long and then left click it again to go short, or if we had some kind of plan drawn out, I'm just moving the lines, I could actually use the pull down, come to enable planning, and come and redraw plan, and that will reset my plan as well. What you will find out is if you draw a plan and we have this plan in place, if we refresh our chart, I just made a modification and that's not supposed to do that. In any case, I'll fix that right away. You can see that the plan is still in place. We don't lose the plan that we set forth. Everything is still in memory until you either change to go from short to long or until we come up and do a redraw plan. Now, in the pull down, we can enable planning or turn it off. And even if we turn it off and turn it back on, the plan that we put in place is still in place. If I use the pull down and come to enable planning, we have numerical values over here that we can select. What that is that allows you to, by default, set the number of ticks that the entry will be from the stop, which will be from each target. So in this case, I have this set on 25. And if I redraw my plan, it automatically comes up, sets my entry at the last traded price. My stop is 25 ticks away, and each of my targets are in increments of 25. If I'm looking at a much smaller chart and you happen to want to look at 10, we can do that. If you happen to want to look at something bigger and look at 50, we can do that. I will show you the reason why the 100 and the 1000 is in there. That's more for stock traders. A tick in a stock is a penny. If you're looking at a stock like Apple, and we will do that here in just a second, putting your entry and your stops 25 cents away, they're going to look like they're right on top of each other. So in a stock, this would be $1, this would be $10. If you're looking at something like Google, you would need something this big. So that's what our enable planning is the default offset between our stops and our targets. And then we have the redraw we just explained. Each of our targets can be independently set. Our quantities, I'm probably going to look at adding 1 through 10 on this. I haven't found anybody that needed that yet. What we've done I can label things on the left, or I can label things on the right. I normally put them on the left so that it's just out of way and it's not interfering with any kind of clutter on my chart over there on the other side. We said we showed plan details and we show percentage details. What's the percentage of my account size I'm risking per contract? How many contracts is this telling me that I can trade based on the account risk that I've put together in the plan? That's interesting. I'll have to look at that as well. Didn't have anything there. Okay. Percentages, plan, entry price, left labels, and a quantity multiplier. Let's do something here. Let's look at a daily chart instead. And let's get rid of that, and let's get rid of that, and we'll probably have to do that again. Am I connected to data here? Yes. I don't have stock data currently, but I do have some end of day. So we said we wanted to look at Apple. Let's take a look at Apple. So what would be a good trade plan here? What am I looking at? Looking at here to here to here. So Apple could come, well, it could. But if I was just looking at this, and the same type of retracement, let's just say that I want to go long. Now, here's where I need to adjust to a bigger size, you can see. So if I put it to $10, that's $10 on a stock like Apple on a daily chart. Barely enough. But let's say that I'm working out a plan and that I'm going to do this, and I'm going to enter somewhere right here. I'm going to put my first target right here where that breakout would be. I'm going to put my last target up here where it would fill that gap. Let's get rid of that. And I'm going to put my second target right about here. You can see that my quantity of 1 doesn't really apply so much to stocks. But if I said that each one of those had a quantity multiplier of 100, now I'm trading 300 shares. I'm risking $5,000 to make $23,000. My first target is a 2-to-1, my second is almost a 5-to-1, and my third is almost a 7-to-1 for an overall trade plan of about 4.62 to 1. Now, I've got a $20,000 account set up in my indicator panel settings, and this is telling me that I'm risking 25% of my total account balance on this one trade, so we would definitely not want to do this. But decent plan if we were dealing with enough money. This is telling me that based on the risk, account risk of, let's just take it 2%, that I could trade 24 contracts, 24 shares with this type of risk. What I wanted to show you was the applicability of stocks. Let's say I wanted to make those, let's say that I wanted, my target one to be 200 shares and I wanted to trade 400 total. Or I want to trade 100 off of my first one, and we want 200 on my second target and 200 on my third target. We can see how that would increase our profitability. Now, remember, we're trading a big dollar stock here. This move from 397 to 432 is almost $35. So you're looking at $35. And then when we're looking at our target twos, we're looking at, if we move that up to that general area there, you're looking at, $100. $100 times 100 shares, you're looking at 10 grand. That's why our prices are such a thing. If we looked at Bank of America, JP Morgan, Goldman Sachs, I don't know, Citicorp, whatever, Caterpillar, all depending on the price of the stock is going to be dependent on the price of the risk. So what I wanted to do was show you that whether you're trading futures or whether you're trading Forex, if you're trading Forex, you're going to go back to the quantity of one and look at that one as your lot. If you're trading futures, you're going to look at one, and each one of those is a tick. If you're trading stocks, you're going to be looking at that quantity multiplier of 100 or 1,000. It just depends on what type of trader you are. If you're dealing with a penny stock, you might be looking at trading several thousand of them. If you're looking at a Bank of America, maybe you're trading 500 to 1,000 to 5,000, and you're taking several off. Whatever the case, whatever style of trader you are, whatever kind of instrument you're trading, this is applicable and will show you the plan that you have in place before you take it. Let's just say that in this case that we think hypothetically that Apple has put in its new lows and that it's not going below 435. And we're going to put our stop right about there, and we're just going to enter into the market. If we can get there, we're going to enter into the market there, and we're going to take our first target off right at the top, and we're looking at trying to fill the gap on the second. And then our third target, we're going to say that, it's going to come back up here to the top again. Well, in this case, we're still risking $4,300 on this little stop. Then again, if we take our multipliers back down and only traded 300 shares, now we're only risking 2,600. Now, based on our account size, which would have to be larger, by the way, because, again, it's 20,000, and you can't trade stocks without at least 25,000, so it would be better. But this is telling me that based on this risk and based on what I've said I'm willing to risk for my account size, that I should only be trading 46 shares based on this risk. Now, this is a daily chart. You could put it on a 5-minute and look at dollars and cents, and be much more realistic to the account size that we're looking at here. We enable planning between the dates. We redraw. We can set our quantities. We can set our quantity multipliers. We can set our account risk. We can label things. Because this isn't dynamic data, I can't show you this, but this entry as price, if I click that and I set a plan in place, my entry line would act as a price line and go up and down as price is going up and down. And all of this would dynamically change based on the plan that I have set up. So let's just say that I was looking, let's go back to the euro, and let's go back to a 20-minute chart, and let's take our quantity multiplier back down to 1. Oh, and let's redraw that plan. And let's set a reasonable targets. And this time, instead of playing that short like we were looking at it before, we're going to play it long and say that we just made the lows, and that we're going to get in here, and we're going to look at taking our first target off here, and we're going to look at taking our second target off here, and then we're going to try to be pushing up to this consolidation area over here. Actually, why don't we say right there for our third? Based on this risk and this plan, saying that this little swing low or doji, if you were looking at a candlestick, that's our low, we're not going to go below it. Based on this, I could trade 4 contracts. I'm risking $300 right now, trading 3 contracts. I'm risking $300 for a possibility of over 15. Got it over a 2-to-1, over a 5-to-1, over an 8-to-1, depending on what other indicators that you might happen to use or how you look at the market. If this was a viable plan for you, we see that our overall plan is extremely acceptable. Entry at price. Okay, so if I click entry at price, what this would do is, if price was here, this would follow price up and follow price. See everything dynamically changing? So that if you knew where your stop was and you were waiting for price to come down here, you wouldn't even have to have a limit order. You could say, oh, buy market. Or as price is coming down, you buy one there. And then you buy another one there. And then you buy another one there. And then your stop. You already know where your exit is for everything. You just happen to scale in across this little consolidation range here to play it on the way up. Just an example of how to use entry as price. Sometimes I'll watch that just to see how the plan would play out on any type of retracements and stuff, or for it to show me where a better entry is, where it isn't. So we have percentages, we have total we have the whole detail. I can label left, I can label right, I can actually change these label sizes of the lines in the indicator panel. Everything in the indicator panel I can change the colors, I can change the label size, I can change whether they're dashed, I can change the width of them, you know, I can change my quantity. I can even change the color of the icon for the drop down in the NinjaTrader bar up here. I can change the color of the hidden and the default color of the background of that button if I want. I can set my account risk, I can enable planning, I can do all of that here in the indicator panel itself. But why? Why when I have it all at a click of a fingertip? I can right click and that whole trade plan is gone. Now it's still there. If I adjusted this to the way that I had it, we'll leave it like that, it's gone. But when it comes back, my trade plan is right back where it is. My trade plan, once I've set it, does not reset itself unless you go from long to short, or you change your scaling, or you redraw your plan. You refresh the chart, you add an indicator, you do whatever else, and it will remain so that you don't have to reset it. That is about, I think that covers everything. If you have any questions, as always, I can be reached at edge@htech.net. You can visit me on the website at www.htech.net, or you can contact me on Skype. My nick on Skype is Edge358. Well, I hope this was informative to you all. Have a good evening and good trading.